All right, we back once again, part 3 of using these gamma exposure charts, GEX charts. If you haven't watched the other 2 videos, this is going to be part 3 of that, just because we're starting to build on our understanding of what these charts are, what they mean, how they can make you a better trader. I've already kind of done some like quick training sessions with the peeps in my Discord. Yeah, I said peeps. And I'm feeling a little cocky because, wow, these charts are really helping me out a lot, and the trading is just taking another level. So once you can understand what is happening here, your options game, I think it goes to the roof. So that's why we're doing these videos. That's why I haven't done a lot of videos lately, was because I've been trying to figure this out and try to get away from the chart-based algos, and understand what's really happening behind the scenes, the market internals, that kind of stuff. So we were talking about Tesla, just because Tesla is such a great stock to trade. So here is Tesla as far as what we were looking at yesterday, and I'll pull up a new one here in just a sec to show you how it's changed. Actually, let me go do that right now. But what we said yesterday was that Tesla opening here below the volatility trigger. Okay, so here's the chart that we set up as far as using the GEX chart, using the expected range, which is March 11th. So if you're new here, please go watch the old videos. But I'm going to do a quick review of what the chart really is. It's showing the options chain for the next 98 days of expiry. So you got March 11th through May 20th. It's going to show you the gamma exposure at each expiry. Okay, it's going to show you the total GEX gamma exposure, and then it's going to show you where those big levels are, where all the gamma exposure is. And what that gamma exposure means, it's going to act. Those are going to be support, resistance, and they're actually going to act like magnets. The bigger the gamma, essentially, the more that price is going to be attracted to that level. And so instead of thinking so much, what happens is, I think a lot of people are looking at their charts, they're not understanding that the price of the security, the equity that you're trading, is being drawn towards these gamma exposure levels for the most part. And so understanding where the big gamma is, you'll have a better understanding of where price is likely to trade towards by that expiration, because that's what it's trying to do. That's what the price is. That's what the market maker is trying to do. They're hedging the price towards those big gamma levels. Okay, so anyways, what we saw today was, this is what we pulled up yesterday. I'm going to pull up the new one. This is the new one. So I don't know if there's a huge difference here yet. Let's see. I like to look at it. So you see how it's changed? What changed here? I mean, we're already seeing what happened. We're seeing a huge amount of gamma exposure, and this is going to be for Friday right here. So maybe this helps you guys get a little trading on Tesla. I don't know. But what I'd be looking at here is, okay, so our range here essentially is still March 11th. Okay, so we would still be March 11th. Our range on calls would be about 870, 860, basically 867, right between that, 865 and 870, and then our range on the bottom side, basically 787. So what we do is I'll come in here in this box here. So 867, 787. So this is our new range. Basically for March 11th, we can expect Tesla to trade in between that range by Friday. Our volatility trigger, so this yellow line is what I put in here as the volatility trigger. So that's going to be 825 now. It was 855. So that's interesting that vol trigger came down. The volatility trigger, what it means is when price is above that level, the market maker is essentially fighting you. Like if the price goes up, they're shorting into the strength, they're selling into strength, and as price comes down, they're buying the dip. And so what that means is that it creates a situation where the stock is non-volatile, where it's going to be, kind of just a slow grind higher. if there's supporting flows with calls and that kind of stuff. That's other things you got to watch too. You got to watch to see if the market's good or if there's supporting calls, being bought into the market, especially with Tesla. But, if there's a situation where you're trading above this level, then you're going to want to try and be long. You want to be trying to buy the dips with that market maker. So you'd be looking for situations where Tesla pulls back above that level or into that level and then try to get long. And so that's interesting that vol trigger came down. I like to see that because it was a little high for me up here. So being that it came down, if we see Tesla opening above that vol trigger, buying that early dip into it could be a good play. Now, where can it go? Well, we're seeing here that we had some gamma exposure here. This was yesterday, gamma exposure here. So it's 900, 800. We had a huge bump in exposure here on the 900s. Not as much. We actually had a reduction in gamma on the 800. So what that tells me, and we can see a ton of gamma right here in this little area. So right above our expected range, we're going to see, you would expect Tesla to start to trend into Friday into these levels. That doesn't mean it will go. It just means as of tomorrow, our expectation is going to be for it to be going higher. And so this is going to be, like, if it's for me, this is my play, is I'm setting up these gamma levels here. Obviously we got a huge one there. And we got a big one right there. I don't really see much else other than this little node here, just around that like 880 level. And something else that's helped me is just using the psychological level. That's what's nice about these gamma levels, is you're not looking for these weird. You're not looking for these weird, like, 883.5 or like the 867.9. If it hits that number, it's going to go crazy. You're just playing the psychological level with the most gamma. It's very, very, very simple. Okay, so now we got our picture onto the chart that basically matches up with what this looks like. And we got our two largest gamma levels. We're really looking at this as only trying to play it to the upside, mainly because we got this big level that's going to be sort of act like a magnet. We got our expected range. So we know what kind of contracts or what kind of range we can expect out of it. So for example, like a lot of times when I buy a Tesla, how long do I hold it for? Because you can buy a Tesla contract and it doubles really fast, but then you sell it and then it goes on to triple or even 5x or whatever. And you look back and you go, well, I wish I would have held it. So if you have an idea of what the expected range is, you can have an idea of how long you want to hold it. So if we see Tesla opening above this 825, that early dip would be a nice place to maybe get into like the 850s, 860s, 870s. You could even buy the 900s knowing that there's a lot of gamma there, and there will be a lot of IV expansion onto that contract as Tesla rises. But you would probably want to be out of it as it comes into the 870 level. That's just basically that's what the options chain is saying. Now, can it break above the expected range? For sure it can. But your odds are going to decrease heavily if you try to hold above that. And I'm going to show you an example of this, what happened today. Obviously, today was kind of a wild day, but I set up a gamma chart with ES here. And essentially, the gamma chart that I had going on was, I had an expected range of literally the top here. The expected range was, the bottom was the same, but the range was about like right here. So it looked like this. So this was my box here. And so as price was just ripping off of like Joe Biden or something, obviously I'm going, okay, so we're sitting here at the top, and I think it was more like this. We're sitting here at the top of the expected range, and we just ripped for an hour and a half, something like that, like 100 points. There's not an expectation of this going much higher than this, because this is the expected range. This is actually the expected range for Wednesday, and that's different now, but so we had already hit the top of the expected range for Wednesday, and it's only Tuesday. So that just tells me that we're extremely overbought, And so that's why I was getting into puts all the way up into this level here. I was getting into puts, and I knew the ranges, so I knew that if this failed, then we're probably coming back into the balance area. And so that was my play using the GEX chart. Tesla. I didn't get into Tesla because basically it held this gamma level here, this 800. It held the expected range low, which was I think it was actually down more around like 870 or 775, 780. But because it was holding that range and it got back above the gamma level, I was out of puts completely. But we were still below 855, which was the volatility trigger, so I just completely avoided it for the most part. No puts, no calls. You probably could have made money on calls, but it was kind of difficult to do that unless you were already in it for the rip. So I avoided Tesla for the most part. You got the anchored VWAP kind of coming into us as resistance, and that's another thing that I like to do is, and this is an idea I got from someone in my Discord who told me just throw an anchored VWAP at the highs or the lows of the previous day. A lot of times it'll act as resistance. So anyways, again, I'm going to see if I can get everybody a link to the Discord. I'm not sure if he's going to let me do that yet, just because I don't want to, if he doesn't really want a whole bunch of people flooding the Discord or whatever. But you guys can join my Discord, and the link will be in the description. And if you do, we'll probably be able to get you a link to the Investor Havens, just because it's in there already in the chat. So there you go. Hopefully this video helps you guys out, and we'll see you tomorrow for part 4. Peace.